What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started.
BNGO has amazing technology and hardware, as we all know, but they completely misunderstood how to monetize this in the past. So their business model before wasn't working and they weren't making much money. Initially, they were focused on selling the machine, which is extremely expensive, instead of selling it as a service. But then recently they changed their business model, whereby BNGO now gives away Sapphire for free and charge labs etc. whenever they use it. So since they changed their business model, which was about 6 months ago, they immediately started seeing improved revenues. So basically what I'm saying is that this new business model is still relatively new, but seems to be the right model for the company. So what we're looking at today is a good percentage increase in revenue from services and other revenue, because that's how they'll make money. So revenues for the fourth quarter of 2020 were 4 million, an increase of 1.2 million or 43% when compared to 2.8 million for the same period in 2019. The increase was primarily due to a 1.1 million increase in service revenue, contributed primarily by our Lineagen subsidiary. So this is great. As I mentioned before, we wanted to see this service revenue increase, which it did, so that's great news there. Revenues for the year ended December 31st, 2020 were 8.5 million, down 1.6 million from 10.1 million in 2019. The decrease was driven primarily by customers limiting their lab operations in response to COVID-19 restrictions and the introduction of our reagent rental program, partially offset by 1.6 million increase in service revenue. Now on the surface, this looks bad, but remember COVID affected a lot of businesses, and let's not forget that back then they were still trying to sell the actual machine, which was the wrong business model for them. And things have turned around since then, since they've pivoted towards services. Their operating expenses increased, but this was all due to the acquisition of Lineagen. So this is nothing new, and we knew about this already. So overall, I'm actually pleased with the results. It shows that the service model is working, and to me it looks like they're heading in the right direction. Now there are some more catalysts coming our way, and some of these milestones will have a significant impact on BNGO's ability to generate more revenue. The first one is lined up for Q2 2021. This is the accreditation of Sapphire-based LDTs for ALL and FSHD in certain EU markets. Now what this does is that it gives BNGO more credibility in the European markets, which means faster adoption in the cytogenetics labs over there, which translates into more revenue coming from overseas. So this is going to be huge when it comes to increasing the revenues in the coming quarters this year. In Q3, they're talking about a commercial release of prenatal assays and expansion of the menu of pediatric assays, according to CEO Eric Holmlin. This presents a total market opportunity of around 3 billion. The next major catalyst is going to be in Q4 of 2021, when they plan on releasing a prototype of next-gen high-throughput Sapphire platform. So this new platform is going to have a higher 14-fold higher throughput than existing Sapphire model. Eric Holman mentions that even though Sapphire is fit for most community cytogenetic labs, there are some labs that need higher throughputs, and these labs get more volume, which is why they're coming out with a next-gen model that will serve these labs and in turn help increase BNGO's revenues further. Another big one is that in Q4 2021, they plan on reaching an installed base of 150 systems, which is a 50% increase year over year. Now in comparison, Pacific Biosciences, which has a market cap of around 6 billion right now, they have a total installed base of around 203 systems, and they've been at it for a while longer. If BNGO is able to get 250 by Q4, then that should be huge. Next, I want to touch upon a question that was asked by one of the investors. One of the investors basically asked about the size of the total addressable market. Eric here goes on to say that the total addressable market for BNGO is massive. Now he didn't say that, I'm just paraphrasing him, but he basically talks about how a time will come when structural variation detection will be done on every newborn to detect any genetic diseases that child might be predisposed to. So imagine if this becomes part of routine procedures after every birth. Now we're talking about a huge total addressable market. I actually talked about this in my last video as well, which I'll link below in the description, but people aren't talking about the personalized medicine field. They aren't factoring in health insurance companies making structural variation detection a mandatory part of the health check. These are huge opportunities. Anyways guys, if the share price dips tomorrow, don't get alarmed, look at the bigger picture. The future is bright and the road to success is going to be bumpy. It's never a linear line with any stock. That's it for today's video. If you like the content, hit the like button, subscribe to the channel, have an awesome day or night, and I'll see you in the next one.